Hi guys, welcome back to my YouTube channel. If you're new here, welcome about. This is the place to be. If you're returning, you just hear some. So in this video, we're gonna be looking at some of the common mistakes that I've been able to get during my career as an accountant, as a senior accountant, as a finance manager. And this is Mumboa, your future CFO. Mumboa is a CMA with over 12 years work experience. So we're going to be looking at some of the mistakes that I've been able to come along as I practice in my field. And we're going to be looking at a balance sheet. And we know that a balance sheet needs to be balanced. Our total assets needs to equal our liabilities plus equity. So one of the common mistakes that I've been able to come along during my work experience, the period that I've been practicing, is an imbalanced balance sheet, where you find your assets are not the same as your liabilities and equity. So what could be the cause of this imbalance? We know when you're posting these transactions through an ERP system, this is like next to impossible. Maybe during the importation of the data from the system to Excel, the data was corrupted. Or maybe when you have your data in Excel, maybe you pressed the wrong button and maybe you deleted some of the data. Let's say, for example, if like I delete that, my balance sheet will not be balanced because my assets will be 1.680 million dollars, and my liability is $1,740,000. So that could be one of the mistakes. Maybe you pressed the button, you deleted the data by mistake, because in the ERP system, it is like next to impossible to have imbalanced balance sheet. So then the first thing that you need to check is you need to check your ERP system to make sure that it's posting transactions as it's expected. And if there's a problem, you need to go back and check what exactly is happening, and now you're able to correct the mistake. So another mistake that I've been able to come along during my practice is liabilities that are moving in the opposite direction. Maybe an asset moving in the opposite direction, or a liability that is moving in the opposite direction. And to explain this, let me take you to my one of schedule that I've prepared. Let's say, for example, here, this corresponds to our balance sheet that says our liabilities, our current liabilities are 300,000. But looking at this schedule, we have the accounts payable. We have some sales tax that is payable within 18 months. And we have other accruals. And we have our other accruals sitting here as a negative. So this could be a mistake, because accruals need not to be moving in the opposite direction with the other payables. So probably this is a receivable. We need to reclassify this into receivables. Another mistake is misclassification of liabilities. For example, we have a sales tax that is due within 18 months. So 18 months, we know our current liabilities. These are obligations we need to pay within the next operating cycle, which is either the next 1 year or the next operating cycle, whichever is longer. So this is more than a year. So this is not a current liability. So this needs to be classified under long-term liabilities. So those are some of the mistakes that I've been able to come along as I practice. So you need to go into details and get to know the makeup of each and every line in your balance sheet. Another mistakes that I've been able to come to see with the balance sheet is accounts receivables. And we know account receivables need to be reported net of provision. Sometimes maybe we're not doing the provision the right way, or maybe we're not doing it at all. So that is something that you need to check to make sure your accounts receivables are reported net of provision. Another mistake is that when it comes to inventory. Inventory should be reported the lower of cost or the net realizable value. We need to check the makeup of our inventory. What is sitting under inventory? Have we written off obsolete goods, damaged goods, to make sure that the balance that we are reporting is the right position? So that is something we need to check as an organization to make sure that our inventory balance is correct. Another mistake is when it comes to non-current assets, the depreciation. Are we depreciating our current assets? Non-current assets, the way we're supposed to depreciate. If it's motor vehicles, the policy of the organization says we depreciate over a period of like 4 or 5 years. We need to make sure that we're depreciating monthly, and you're posting the depreciation expense as expected, so that the value that appears on the balance sheet is net of depreciation. Another mistake that I've been able to come along is when it comes to current and the non-current liabilities. These are the long-term debts. Are we paying as expected? Are we booking the payments correctly in the system? So we need to make sure that we are booking the payment correctly in the system, so that it's net of it's reflecting the true position. So those are some of the mistakes that I've been able to come to see as I practice as an accountant. And your feedback will be highly appreciated. Maybe if you've seen another mistake, I highly appreciate it. You can leave a comment down on my video. And I hope you've learned something new from my video. You're gonna be a better accountant. You're gonna be a better finance manager, a CFO. Or maybe you're learning accountant, you'll be a better student in accounting. So thank you for staying with me. If you like my content, kindly share with someone who will benefit from my content. And this is the place to be. We're really covering a lot of content when it comes to accounting. A lot of content when it comes to improving how we do things in finance and accounting. So thank you for staying with me. Don't forget to hit the subscription button to get future notification of videos that I'm posting each and every day. And together, we're gonna grow strong. Thank you and be blessed.